You built your online store, you got your LLC, you're making sales across the country. And then one day, out of nowhere, a state you've never even set foot in sends you a notice saying you owe them thousands of dollars in back taxes. That is not a hypothetical. That is happening to real business owners right now, and most of them had no idea they were doing anything wrong. Here's the stat that should wake you up. After the 2018 South Dakota Wayfair Supreme Court decision, every single state in America gained the legal power to demand sales tax from your business even if you never physically touched their state. If you are running an online LLC and you are not thinking about sales tax Nexus, you are one audit away from a financial nightmare. So in this video, I'm going to break down exactly what Nexus means, which states can come after you, what the thresholds are that trigger your tax obligation, and most importantly, what you need to do right now to protect your business and stay fully compliant in 2026. Stay with me because this is the most important compliance conversation your LLC needs to have. What is sales tax Nexus? Let's start with the basics because a lot of people hear the word Nexus and immediately tune out. Don't do that. This word could be the difference between your business thriving and your business owing a state $50,000. Nexus in the world of sales tax simply means a sufficient connection between your business and a state that legally requires you to collect and remit sales tax in that state. Think of it like this. If a state believes your business has enough of a presence there, whether physical or economic, they believe they have the right to tax your sales. And here's what makes this particularly tricky for online sellers. You don't have to have an office there. You don't have to have an employee there. You don't even have to have been there yourself. All you need to do is sell enough product into that state and you've triggered Nexus. There are two types of Nexus you need to understand: physical Nexus and economic Nexus. Let's break both of them down. Physical versus economic Nexus. Physical Nexus is the older, more traditional rule. This is exactly what it sounds like. You have a physical presence in a state. That could mean you have a warehouse there. You have an employee working remotely from there. You're storing inventory there, including through Amazon FBA or a third-party fulfillment center. You have a business location, a trade show booth, or even a contractor regularly doing work in that state. If any of those apply, congratulations, you have physical Nexus and you owe sales tax in that state. But here's where it gets really interesting for online sellers and where most people get blindsided: economic Nexus. Economic Nexus was created as a direct result of the 2018 Wayfair decision I mentioned earlier. This rule says that even if you have zero physical presence in a state, no warehouse, no employee, nothing, if your sales volume or transaction count crosses a certain threshold in that state, you have Nexus. You are legally required to register, collect sales tax, and remit it. This is the rule that changed everything for online business owners. And the thresholds, they vary by state, which is exactly why this gets complicated. The state thresholds, you must know. Here's the part that most people skip, and it's the part that gets them in trouble. Almost every state that has a sales tax has now adopted economic Nexus rules, and the most common threshold you'll hear is the $100,000 in sales or 200 transactions rule. But, and this is critical, not every state follows the same threshold. Let me give you some examples. California, $500,000 in annual sales. That's one of the highest thresholds in the country. If you are under that, California won't come knocking. Texas, $500,000 in annual sales as well. New York, $500,000 in sales and more than 100 transactions. South Dakota, the state that started all of this, has a threshold of $100,000 in sales or 200 transactions. Colorado, $100,000 in sales. Pennsylvania, Ohio, Michigan, Illinois, all sitting at $100,000. And some states like Oklahoma and Louisiana have gone even further, dropping the transaction count threshold entirely and only using the dollar amount. Now, here's the scary part. These thresholds can change. States update their rules, and as your business grows, you can cross multiple thresholds in multiple states in the same year without even realizing it. This is not a set it and forget it situation. You need to be actively monitoring where your revenue is coming from. The $100K rule that changes everything. Let's talk about the real world impact of that $100. 000 threshold, because for most growing online businesses, this is the number that matters. If your LLC is generating even moderate revenue online, You could be crossing state economic nexus thresholds without knowing it. Say you sell on Etsy, Shopify, or Amazon. You're shipping products to customers in 40 different states. Even if your average sale is $30, if enough customers in one state are buying from you, you could cross $100,000 in that state and not even notice. And here's the thing about back taxes. States don't just want the tax you should have collected, they want interest, they want penalties. And in some cases, they'll go back 3 to 4 years of unpaid obligations. One medium-sized e-commerce business that ignored Nexus rules ended up with a $200,000 audit liability across just 4 states. That's not a business fine, that's a business-ending amount of money. The good news, if you get ahead of this, it's manageable. You register, you collect, going forward, you're in compliance. The problem only becomes catastrophic when you wait until a state fines you. So let's talk about how to actually figure out where you're exposed, how to figure out where you owe. Step 1. Run a Nexus analysis. This is essentially a review of your historical sales data by state. You want to look at every state where you've had sales in the past 12 months minimum and compare your sales volume and transaction count to that state's economic nexus threshold. Most serious e-commerce platforms like Shopify, WooCommerce, and Amazon Seller Central have sales by state reporting built in. Pull that data, build a spreadsheet, compare it to each state's threshold. If you've crossed the threshold anywhere, that's where you have Nexus, and that's where you need to register for a sales tax permit before collecting anything. Step 2. Register in the right states. This is where a lot of people make a second mistake. They just don't register, or they try to do it themselves in 10 different states and make errors that create more problems than they solve. This is exactly where professional services come in, and this is where I want to highlight some tools that can make this process dramatically less painful. Tools and service. To stay compliant for multi-state compliance specifically, I want to start with Harbor Compliance because this is their specialty. Harbor Compliance focuses on business licensing and compliance across all 50 states, and they are one of the most trusted names in this space for businesses that are dealing with multi-state Nexus registrations. If you've already crossed thresholds in multiple states and need to get registered quickly and correctly, Harbor Compliance should be your first call. For forming your LLC and keeping your business entity in order, you've got excellent options depending on your budget and needs. Northwest Registered Agent is consistently one of the most privacy-focused and transparent services out there, great for founders who want simplicity and reliability without upsells. ZenBusiness is a strong pick if you want guided compliance tools bundled with your formation. They've built a real infrastructure around keeping small businesses compliant year after year. LegalZoom remains the most recognized name in the space and is a solid choice if you want legal resources and document support alongside your LLC. Rocket Lawyer is excellent if you're going to need ongoing legal document support, especially for multi-state businesses that may encounter contract and compliance questions. Inco Authority is one of the few services that offers free LLC formation. You just cover state fees, making it a great starting point for new founders watching their burn rate. Swift Filings and Keller Brands both offer fast, clean formation experiences. Keller Brands is especially good if you're also building a brand identity at the same time as your LLC. And if you're looking for a newer platform that combines the ease of online formation with modern business tools, Breezy is worth exploring as it continues to grow in the startup space. The bottom line, use professionals. The cost of a compliance service is a fraction of one state audit. Your action plan. Let me give you your 3-step action plan before you close this video. Step 1. Pull your sales data by state today. Go into your selling platform. Export your last 12 months of sales organized by state compared to economic nexus thresholds. Know where you stand. Step 2. Register in every state where you've crossed the threshold. Don't delay this. The day you cross a threshold is the day you should be collecting. If you're already past it, get registered and get compliant as fast as possible. Services like Harbor Compliance or ZenBusiness can help you move quickly. Step 3. Set up a system to monitor this going forward. Your business is going to grow. New states will be added. Thresholds will be crossed. Use your accounting software or a sales tax automation tool like TaxJar or Avalara to track this in real time so you're never caught off guard again. Sales tax compliance is not exciting. It's not glamorous, but it is the difference between a business that survives and a business that gets wiped out by something 100% preventable. If this video helped you understand where your LLC actually stands on sales tax, smash that like button because it genuinely helps this content reach other business owners who need it. Subscribe if you want more LLC, legal and startup content that's actually built for real business owners, not lawyers talking over your head. Drop your biggest question about sales tax or compliance in the comments. I read every single one and your question might become the next video. I'll see you in the next one. Take care of your business before the government does it for you.